get back to the price of crude oil. It is on the surge. We had those drone attacks on Saudi Arabia's oil infrastructure over the weekend. So what does it mean for energy investors? Our next guest says anyone who believes this is a sell the news type of event, uninformed. Eric Nuttall, partner and senior portfolio manager at 9 Point Energy, joins us now. Good to see you, Eric.
Thank you.
So this has been a painful space for Canadian investors over the past several years. The energy stocks today, we're seeing a huge rally. You're saying this isn't a one-day event.
No, the significance of today can't be overstated. So we've just had the largest piece of infrastructure in the world in the energy market taken offline. The Saudi is down almost 6 million barrels per day of productive capacity. The most up-to-date reports that we have is that the damage is actually much more extensive than what was being initially reported. It's likely going to take weeks, if not months, to get back the majority of that production. So let's say Saudi's losing 3 to 4 million barrels per day, even a few weeks' time. They only have 27 days of inventory to make up for that shortage. And when we look at beyond OPEC, Russia was always generally cheating, so they have limited latent capacity. Iranian sanctions certainly are not going to be loosened now. Venezuela is under sanctions. Canada's curtailed. So the market is it was already tight, but this significantly tightens it.
I've seen some suggestions today in the coverage about what has happened over the weekend that we have been complacent about our energy supply in this world, that there was always this tension, of course, and we sort of ignored it for the longest time, but now it's sort of come to roost.
Yeah, and we went through an environment where people thought there was an abundance in U.S. shale. What we're seeing now is that as investors are demanding return of capital over growth, the rate of growth in U.S. shale has been falling from over 2 million barrels per day. I think we'll exit this year at a negative year-over-year growth rate. And so what does this weekend mean? It means that security of supply is much more important than we thought, and hence the value of Canadian supply to the United States, both in infrastructure and suppliers themselves. So when we think about valuations coming into the weekend, we had the worst sentiment in history, coupled with the cheapest valuations in history, and now we've got the largest supply disruption in history. So in my mind, those are three very important ingredients to a powerful rally. This is not a one-day event. This is going to have lingering effects for the days, weeks, and months ahead, not only in an enduring political risk premium, but also when we think about the need of catalyst to bring money off of the sidelines.
Now, we saw that big jump in Western Canadian Select along with the global benchmarks. What do you see for Western Canadian Select heading out for the rest of this year? We're going to try to maintain that kind of strength, even build on it?
Yeah, so differentials today are about $12. I see about $12 to $15 differential given the shortage of heavy crude in the world. We think that refiners are bidding below rail economics because there is a shortage of crude, so that they don't go down to the U.S. Gulf Coast, they go to other refining complexes. So we think the environment for WTI, for heavy oil, every benchmark you look at is going to be very, very strong. And when I look at companies today trading off of $47 WTI, 2020 strip is 56 as we speak. That's heading higher. So there's a huge bridge in value from where energy stocks are in discounting relative to where oil is likely going to go. Many stocks, given how far they fell, could easily double to triple from current levels.
How much of a boost is this then for these big Canadian energy names? Because we know with depressed prices over the past several years, they've had to run fairly tight ships. I imagine they have their costs down to a degree that a big price jump like this just must be cash flowing through the company. Yeah, so
to your point, cost structures have been massively reduced. The era of cafes and bars and Heimer's costing $500 and such, those are long gone. So coming into this weekend, we already had companies at $60 oil trading at like 15, 20, 25, 30% free cash flow yields. A company like a MEG, a $5 move is going to juice their cash flow by up to 40%. So this is all to the bottom line. Stocks were discounting 47, now we're at 55. And even so, when you look at, crude's up 15% now, but oil was weak last week on the worries that Iranian sanctions were going to be loosened. Oil fell from 58 down to 54. So really, the oil price is only up about $5 from that $58 level when we've just had the largest supply loss in history. So one could easily speak to further upside in the oil price.
So we've had this significant geopolitical event on the other side of the planet, but we still have the same difficulties we had before this weekend in Canadian oil, namely pipelines. So how much of that is a hindrance as the world, gets disrupted by this event? Yeah. We still have problems getting our crude to market.
Yeah, so if you buy into my narrative that the value of security of supply just went up meaningfully overnight, nobody thought that what happened on the weekend could ever happen after the Saudi government spends the third most of any government in the world on military. Billions of dollars were spent, and yet cruise missiles got through, it looks like, from Iranian soil. So if you value security security of supply, the value of Canadian production is very, very valuable to the U.S. refiners. Trump over the weekend expedited approvals of any pipeline process. So worries about Line 5 being shut in just went out the door. Line 3 working through the courts, I think will have further support. Keystone XL, I think will gain further support from the U.S. administration. And then in Canada, I strongly believe Trans Mountain is going to be shovels in the ground. Well, kind of an any day thing, but I think despite what government is in power in a month's time, you're going to see that project come to fruition as well. And we've got crude by rail ramping. We'll have about 600,000 barrels a day of capacity in Canada by the end of this year. So that's the reason why we're seeing very tight differentials.
Eric, it's always great to have you here and get your insight.
Thanks.
It was Eric Nuttall, partner and senior portfolio manager at 9 Point Energy.